Welcome to Bears in Exile. Today is Thursday, November the 29th, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UU, PFXE, GLD, SLV, and everything else that we look at. So, away we go. We had the politicians front and center, running their mouths, the normal thing that they love to do, get some airtime, and that caused some moves all over the place today. Certainly not as crazy as yesterday, but still pretty significant. Beyond that, the Dow up 36 points and looking kind of, well, not bad. We have, it's not an inverse hammer, it's not a Spain top, it is a candle of not much. Reaching up with its shadow to touch the lower trend line of the descending channel, which we have been talking about. It did emerge as resistance in the case of the Dow. Very nice. And does this mean that the bulls are licked? No, it does not. We did make a new recent high today. Very nice. It is not a reversal candle, even though it kind of sort of looks like an inverse hammer, but it doesn't meet those criteria. But it is at the bottom of or at the top of a possible range, but I am not overly concerned about that personally. It did close above the 200-day moving average, which is a very good sign. And beyond that, we were saying last night about to be a massive bummer if the secondaries decided to roll over, because we were starting to lean, or were leaning bullish, which was correct today. Do we have any development on that front? No, not really. I mean, we have the fast stochastic still going down, but nothing else has flipped to join it. So, yeah, I'm not overly concerned about that. If we zoom out some more, is this a a really bad formation here? No, it's not. Most of the secondaries are moving with the 14-day RSI moving average, which is to the upside, moving in conjunction with it. And the fast stochastic is actually losing a little bit of steam to the downside, so it can turn around and go back up. We have nothing in the heat map to suggest a top at this moment, just the descending trend line and the long-term moving average bar, what remains of it, which isn't too much. So, problem at this point? No. The only thing that would be concerning is the level of ascent, but it did take a breather, so that's not nearly as bad as it was, at this point right here. So, not too shabby. And I haven't. I'm not going to worry about that at the moment. So daily, you could look at it as iffy because it is into resistance. But you bust that out, and it probably isn't going to have too much problems until you get to the lower price consensus level, and which coincides with this topping area right here in the area of 13,250 roundabout. Yeah, it looks about right. Going on to the 60-minute time frame, the day was really strong most of the day. And it did give some back, but not terrible. Certainly, it would have been nice if it had closed the highs of the day. Then we could have just gapped over the resistance, which is cheating, which I normally don't care for. But anyways, it is what it is. Beyond that, secondary-wise, is this more bullish or bearish? Well, it's actually more bearish in the 60-minute time frame. Reason being, you have negative divergence on the MACD histogram, negative divergence on the RSI, and negative divergence on the CCI. And about positioning, we have the MACD histogram in decline, MACD just going sideways, up on the RSI, mixed on the stochastics, barely down on the CCI, going sideways on the 14-day RSI moving average. But overall, because of the divergences, I would definitely say that it would have a bearish slant to it. Should mean something. Doesn't mean it has to mean something right away. And it can go up and break it. So it's not foolproof by any means. yeah, you could look at this and say, oh, we have a head and shoulders inverse. I don't think that we do, personally. The right shoulder, which would be really, really messy, is not deeper than what could be considered the left, and we don't have increasing volume on the right side. So, anyways, just to dispel that idea, I don't think that it's, I don't think that that would be possible. Going on to SPX, up 6 points, very nice. In the overnight, it was just absolutely crazy. Did not get as much as it had in the overnight, but still pretty darn impressive. 14.15 the level. We can see that it has closed above and into the descending channel on SPX, which is a positive sign. Now it has to stay there. That could be somewhat of a challenge. If it falls back out of it tomorrow, could be a really bad sign, but as of tonight, doesn't appear to mean too much. Everything is the same as the Dow, except we have a little bit of a darker blip in the heat map, but it's still very minor. Not overly concerned at this moment, but you know, anything can change overnight. It doesn't look bad in the daily. And this one should be targeting the lower price consensus level down here at 14.25, and then just above it at 14.30. That's where it should go if it's going to continue on its merry way. 60 minutes the same as the Dow, no need to rehash. Going on to the VIX. Yeah. And the VIX looks quite poor. It could look worse, but it does look quite poor. We had the uptick. The uptick was resolved yesterday. We had to see what it wanted to do next, per the rules. And once you know it, gap down and closing weak on the day. We don't have a new recent low, but we did close below the major price consensus level. It would seem natural that the recent low should be tested, and then beyond that would be the major price consensus level from the month of October. Secondary-wise, we have great alignment for further down movement. Down on the CCI, down on the 14-day RSI moving average, down on the stochastics, down on the, actually, sideways on the RSI. Slightly up on the MACD histogram and down on the MACD itself, but definitely more negative than positive. There is a darker blip in the heat map, but it is not dark red. I would expect that if we get to this point right here, that then we'll get it, and it should have something of a bounce. We did have an inverse hammer today, but it is not at the bottom of a possible range, so it doesn't really mean too much. Short-term moving average is all pointing down, suggesting more weakness, and it is what it is. Very questionable, not too far away from what should be support, but yes, there should be some more to the downside, and that lines up well with going up to 14.25 or 14.30 on SPX. Moving on, TNA. We essentially were long TNA when we shorted TZA yesterday, and it moved up very nice. Spinning top right above, this is amazing, above the descending channel. And secondary wise, we do have a blip in the heat map. We do have almost everything ticking up with the exception of the fast stochastic, which is barely going down, and it is holding high. There's plenty of room for the 14-day RSI moving average, and this appears to be a stuck routine just based on its spacing. Because look how wide this is between the fast getting there and the slow. And we don't really have a terrible angle on the fast stochastic at the moment. So this does look like an extended hold up here. If it seems really I don't know, doubtful if that's the right word, that this would be able to stay up here the entire time while the 14-day gets to the top. But it is what it is, and that would be highly unusual. But if it is able to complete a move all the way to the upside, this has much more to go. I do believe that it will be getting to the $60 area. Beyond that, we'll have to see what it looks like at the time. Certainly, you would think that there'll be a fight now that it's outside of the descending trend line, to get back inside of it. But if it's able to hold and then bounce off of it, very, very, very bullish. So next couple of days, really, really important for TNA. Going on to UUP, the dollar. This one was fascinating all day long, because we have our level of support, and it kept moving up and down through it all day long. Go down, go back up through it, go back down through it, go back up through it. It was just kind of nail biting, and I ended up giving up, calling it out in a daily running thread, because it just kept happening, and it did manage to close above it. It did, and that is a positive sign, but it is a spinning top. It did pierce the major price consensus level, which is the first time it's done it in, all this time that it's been above it. And we do have a darker blip in the heat map suggesting a close bottoming area, but we also have most everything in decline. MACD histogram, MACD, RSI, CCI, 14-day RSI moving average, but we do have both of the stochastics trying to turn up. So something to be aware of, and if this was able to get a bounce, then yes, that would be bad for the overall market, but just not enough information yet. Just having both of these turning up for a day or 2 days is not the end of the world for the bulls. Need more data. Need more. But it did do some really good damage today. Oh, and a new recent low, which also in itself is bearish. Going on to USO oil. Nice gap up. This wasn't really telling us too much last night, except that we had a small blip in the heat map. It wasn't anything really to be concerned about, and but nonetheless is able to gap up today. It was weak throughout the day, and we have disagreement in the stochastics with the 14-day RSI moving average still moving up. We have the CCI going up, RSI going up, histogram moving up, MACD moving up. Definitely more bullish than bearish in the daily time frame, but we are also into the long-term moving average bar area, and we know that we have problems with that. So retreat from it today, retreat from it back here, further retreating from it, couldn't get to it, etc., etc. So can it fight through this? If it can, definitely good for the market, but just don't know yet. Definitely looks more positive than negative. Moving on to, I guess we should look at FXE, just to see what the euro says. This is very interesting now, isn't it? We have this wedge. We had broken down through it a while back. We had gone up to retest it. We fell away. And now it's testing it again, and today it pierced it, suggesting that this is going to not be as difficult the next time around. But right above us we have the upper trend line, and that only reaches up to just shy of 130. So even if we get through this, we're going to have just another thing to bounce off of, which we know it has done in the past. Beyond that, is this more bullish or bearish? Well, we have a nice dark green topping blip in the heat map, suggesting that yes, there is. This is a good spot for it to get turned away, and it certainly could. It is a spinning top, although it did close above the major price consensus level. Beyond that, you do have the stochastics in decline, the CCI holding high, the RSI going up, the 14-day RSI moving average going up, the MACD histogram going up, and the MACD going up. This is more bullish in the daily time frame, absolutely. Stochastics might be a problem, but as it stands at the moment, this wasn't bad, and it's a new recent high, which is also slightly bullish. So except for indecision candle, I wouldn't be worried too much about it. Moving on to CompQ, the NASDAQ. Oh yeah, this one should lead. TNA should lead. TNA looked very good. And the NASDAQ, yep, it doesn't look bad. And look at that, we had the two ascending trend lines we've been watching, both of which have offered some resistance or support at varying times. We broke through the lower one yesterday. We broke through the 200-day moving average yesterday. And look where we stopped, right at the upper. Very interesting. If we can get through that tomorrow, very nice sign. It is a hanging man, barely. So possible reversal candle at the top of a possible range with a small blip in the heat map. Stochastics holding high, CCI going up, 14-day RSI moving average going up, RSI going up, histogram going up, MACD going up. I would say that this is more bullish than bearish, but that candle does have me a little bit concerned and right at resistance. But it is above the long-term moving average bar. I would say it's slightly more bullish than bearish. This one has not had the same kind of a pullback as the Dow. The level of ascent is still pretty darn extreme. That has me a little bit concerned. That is what it is. And going on to Apple. Been really nice if this one had been a little better today. It was unable to get to the 200-day moving average. It closed inside the long-term moving average bar. It was red on the day. It is a doji star. All of which are not great signs. It is a new recent high today, which is something for the good column. It does not have a topping area in the heat map. It's still kind of in the bottoming area. Stochastics are holding high. The fast is ticking down. CCI is going up. RSI is going up. MACD histogram is going up. MACD is going up. 14-day RSI moving average is going up. The only thing I don't like about this is the position and the candle. And 600 sure seems like a natural place for it to go. It coincides with the 200-day moving average. If it gets to that point, I would expect there to be some problems, and that would still be in the long-term moving average bar. So like I'm saying, I don't like the position or the candle. GE trying to get a better read on the Dow. Oh, look at this sucker. Red spinning top, unable to beat the long-term moving average bar, but it did pierce it. Nothing in the heat map to suggest anything. Disagreement in the stochastics, up on the CCI, up on the 14-day RSI moving average, up on the RSI, up on the MACD histogram, up on the MACD. This one is very similar to Apple. It is a new recent high today, but I sure don't like the candle, and I sure don't like the position of where it's at. But I guess we'll see if we can pull it out tomorrow or not. This isn't a great sign for the Dow tomorrow, so maybe Friday will not be a overly pleasant day for the bulls. And JP Morgan, the most important bank. We said that this was a hanging man, bottom of a possible range last night. Although we were in a little bit of a topping area. This is really nice. It beat the long-term moving average bar today. It beat the lower price consensus level today. Yeah, it's a hammer and it's at the top of a possible range, but it made a new recent high, which is good. The stochastics are both pointing up. The 14-day RSI moving average is in ascent. Up on the CCI, up on the RSI, up on the histogram, and up on the MACD, finishing a bullish cross. Not bad. Not bad at all. If this one can pull it out, beat the long-term, the major price consensus level, That will be good for the market overall. Certainly had some consolidation here, and it seems to be attempting a breakout. This does not look bad. This does not look bad at all. And XLF, financials as a whole. Not as nice as JP Morgan. Doji Star, below the lower price consensus level. Nothing really in the heat map. Barely up on the fast stochastic. The slow is going sideways. CCI up, 14-day RSI moving average up, RSI up, MACD histogram up, MACD up. This one doesn't look bad either, but it does not have a new recent high today. So is this as nice as JP Morgan? No, it is not. No, it is not. Would have been might have been a good tell if this had echoed JP Morgan, but I guess it is what it is. And I think that's about it for tonight. Very curious to see if they can continue the move to the upside. It is a very critical day. Every day has been a critical day this last week, which is a little bit of a nail biter. But if we can clear this spot, fantastic. Then we can finish out the move to the upside and be done with it. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.